The real estate year has come to an end, and it's time to look back to find out if some of the predictions that I had made over the past year have come true and which things I was completely wrong about. Every single Sunday, I do a live stream where I meet with mortgage professionals and other real estate agents in different markets to talk about what's actually going on in real time in the real estate market. So I think it's really interesting to see what we were saying in December of last year to see if any of those things came to fruition. So will the prices go down in 2022?
Nah, I think the news that came out last week was the perfect time. People that are scared to buy are now having that little push to buy. So that's going to continue to have the market go crazy, which is insane because I feel like if they would have just increased the rates to like 3.5 or 4, it would have slowed things down then. So what's going to happen is there's going to be still a rapid rate. And then once rates do catch up and they're in near 4, then people are going to start slowing down and then we're going to see what happens.
That was real estate agent Javier Vaidana, and he was correct. When interest rates did hit about that 4% mark, people did start panicking and the housing market did definitely slow down. At that time, people were really panicked about the prices and they were really looking for a housing market crash or correction. There was thousands of videos on YouTube talking about the housing crash that was supposed to happen in 2022. That didn't come to fruition. There was no housing crash. Now, some markets did face a correction, but we have yet to have seen those same markets crash. Well, time will only tell what happens in 2023 with some certain markets. But here's what my good friend Sir Ashley had to say about what was going to be happening in 2022. George says 22 is forecasted to be crazy, but will there be a major correction in 2023?
So major correction in my mind, I'm thinking 15 to 20%. No, I don't foresee that happening.
By March, we were still wondering about the supply of houses, and it was still at a record low. It was killing people. So this is what Jason Walter had to say at that specific time. Is your buyer demand still the same or decreasing?
So far, the indicators show that the buyers are kind of okay with interest rates. I'm really going to be looking at more like leading indicators of a housing market in the next week or two, because things could change pretty drastically across the nation and also in my market too. You know, near record low inventory, houses selling very, very quickly. It didn't seem like really much has changed so far, but stay tuned.
And he was right. We stayed tuned. And it does seem that there has been an increase of supply of homes across the United States. Unfortunately, it doesn't happen to be an increase of homes that are necessarily affordable. Even though we do see some areas that are seeing more drastic price cuts, home affordability is still a national problem. It isn't just unique to California. So now let's just skip to April, when everybody was really trying to put me in a corner and make me give a prediction on interest rates. I was wrong. I admit it. George, you were right. I said it was only going to be 5.25, and now it was like literally creeping, and it got over 7s. It didn't get into the 8s. If you were to predict interest rates at the end of 2022, where do you see rates at? I had said originally 4.75, but now I'm creeping at 5.25. What are you thinking?
I mean, definitely 5.25, 5.5.
What do you think, Susanna?
Oh, yeah. My first inclination was 4.75, and then I was thinking too, it's like, well, we're already at 4.25. And then I remembered an article, forgot where it was, but they said 5.25.
As we drifted in more into the middle of the year, there was some talk about some really cool things that were happening in real estate, but it didn't happen to be in the United States. And I want to show you this clip really quick.
The line's communities are organized in 3 dimensions, and the line's infrastructure makes it possible to travel end to end in 20 minutes, providing equitable views and immediate access to the surrounding nature.
The whole video is like 2 minutes long. I just wanted to show you at least 15 seconds of it. It's like one of those things I could just hear them. They're like, everybody's happy in the line. Don't you want to be a part of the line? And originally when this first came out, they were saying that this was just a concept. It wasn't necessarily something that was going to happen. Just in the last couple of weeks, they have now said that this is going to be a reality. I would love to see what happens in the future with the line. Back to what we were talking about in our predictions in 2022. Corporate investors became a hot button topic that I had been talking about for several years, but it started really getting into the headlines over the last couple years. So I ended up talking about that on a live stream with Jeremy Knight. And here's what he had to say about corporate investors in the Austin housing market. I think if mortgage rates hit 8% by the end of the year, the housing crash is inevitable. A housing crash, but not like the crash that you saw in 2008, 2009, 2010 that continued on for many years. To this day, I still maintain if there is a housing correction, we will not see it like we did in 2008. And I've said this a million times and I'll say it again. We don't have the same kind of loans that we had in the previous housing crash that caused the housing crash. Has anybody seen the movie The Big Short? They explained the whole thing. They were basically giving loans to anybody. And not only that, people were doing like 1 or even 2 loans on a specific home and pulling out the money and using their houses as ATM machines. This is what caused the housing crash. Not only that, they were giving those loans to people that didn't even have the income to support it. When those loans reset, then all of a sudden the house of cards came tumbling down. And everybody knows we bailed out the banks. You can decide if that was a mistake or not. As we drifted into the middle of 2022, people still were concerned about corporate investors that were buying up houses across the United States. They still seem to be taking a big chunk of the pie, especially the most affordable homes in some of the hottest markets. And this is what Jerry Knight had to say about it in the Austin market.
Linda Kingsley says, are corporate cash buyers still in Austin or other parts of Texas? They've been all over Austin. We've been talking about that for 3 years.
I wouldn't necessarily say that the cash buyers are all corporations, but like 18 to 20% of buyers right now are investors in the Austin market. It's been that way. It went up to like 22% at the beginning of the year. I would say corporations, of what we can tell, probably only 2% of that 20%. There is a couple neighborhoods that I saw that were all built as duplexes. And I'm like, sweet, I'll buy one of these duplexes. Company had already purchased all of them.
Now, May of 2022, the headlines have changed, and so have several housing markets. We were looking at Boise, Idaho, Austin, Texas, Phoenix, Arizona, and started seeing some drastic price drops when it came to the listing price. I had my friend Susanna Haney on, and she was definitely alarmed about what was going on in her area of Colorado Springs, Colorado.
Yeah, we shifted on like within a weekend. Basically, one weekend was fine, next weekend it wasn't. And that took a lot of us by surprise. I mean, we expected it, but that shift was just so quick.
Is your market supply pre-pandemic levels or actually higher than pre-pandemic levels?
Higher. So
With mortgage rates going up at that time, inventory increasing, and we're seeing some areas that are having some price reductions, people were looking for more of our crystal ball predictions.
Oh, the crystal ball question. I don't know where my crystal ball is. I have one around here. It says, will you ever get a double-digit mortgage interest rate in the next 5 years?
I think it's possible. Since the early 80s, it seems like it's constantly in this downward trajectory as far as interest rates. And it's getting to a point where I feel like we've created a system that is addicted to low interest rates.
We as Americans might be addicted to lower interest rates. I get it. But we also are addicted to the idea of a housing crash. But the definition of what people think is a housing crash and what a housing crash truly is a little muddied. But we get this all cleared up with my good friend out of the Maryland real estate market, and she tells us exactly what it means.
A housing crash is a sudden and steep decline in home values, often leading to economic ruin for many homeowners. A housing correction, on the other hand, is a slow and steady return of elevated home values back down to balanced levels. When I think of a housing crash, I think of economic ruin for homeowners, because that's what happened in 2008. To me, because I lived through it, that's what I think of when I think of a housing crash.
By September, we were still discussing corporate investors. There had been some headlines out that said that a lot of corporate investors were pulling out of certain real estate markets. And it seemed to be that way, especially in areas that were really hot, just like Atlanta. Shahida Hill did come on to the live stream and explain exactly what corporate investors were doing right now in her specific market. But this was in September. Just keep that in mind.
Yeah, like one time, I think 40% of all deals in Atlanta were institutional investors, private investors, that sort of thing. Now I would say that's definitely declining, because things are staying on the market a little bit longer. And so those first-time home buyers in that price range have a better opportunity to actually buy that house.
I love me some Shahida Hill, and I also love me some Jackie Baker. She's out of the New Jersey market. We ended up discussing the foreclosure rate that's happening in New Jersey. If you don't know, New Jersey actually does have the highest amount of foreclosures, and she explains a little bit what's going on there.
New Jersey court system is so backlogged, and it was backlogged prior to the pandemic. So now it's even worse. So anyone who's looking for a discount right now, like even when I'm searching on multiple listing and I see foreclosures, I just look anywhere for foreclosures. They're all sitting in the courts right now. There's not a ton available for sale yet, but there's a lot that are just hanging out in the courts.
Whenever I have her on, I go, Jackie, it's Jackie Baker. can't help it. I got to do a little New Jersey accent. But to round out the year, the hottest topic that has been when we're closing out 2022 has been the Fed and how much they have increased interest rates and how that is actually affecting the housing market today. I had my good friend Ryan LaRussa with GMFS Lending come on to the show and explain to us what it really means at this moment to have high interest rates when it comes to purchasing a house.
More people now are sitting on more equity than any time in history. Anytime. The average loan to value nationwide, depending on what report you want to read, it doesn't matter. Just call it 40 to 45%. That means if Ryan LaRussa gets into financial trouble, that I've got 55 to 60% equity position. Let's say the market corrects 10 to 15%, which I do not anticipate based upon the demand. I still can sell that house and get out.
So what Ryan was actually saying there is it doesn't look like that the people that are selling their houses currently right at this time are going to be losing enough money that they would need to go into foreclosure. He kept saying the equity position that people have at this point means that they are not underwater like we were in the last housing crash. Now that we can look in the rearview mirror, I'd like to know what you think is going to be happening in the 2023 housing market. The only thing I can possibly say is I have it on good authority that we could be in the fives at the beginning of this year. We'll see what happens. To watch more videos and some of my live streams from Sunday, you're going to want to watch these videos right here. My name is Kristina Smallhorn, your real estate whisperer, and I tell you all this because good real estate information matters. Because good real estate information matters. And Happy New Year.